All right. Thanks everyone for joining. It's so good to have everyone on here. It's 101, and we've got a lot to cover today, so I suggest we go ahead and get started. I'd like to begin our session today by acknowledging the traditional owners on the land of which I am joining, and that is of the Wurundjeri people of the Kulin Nation, who are the traditional owners of the land in which our UNGCNA office is located here in Melbourne. And I'd like to pay our respect to their elders, past and present. Here at the UNGCNA, we'd also like to extend that respect to all Aboriginal and Torres Strait Islander peoples and the traditional custodians of all the places from which we are joining. Thank you for joining this very special monthly Sustainability Reporting Community Practice, or SRCoP session. And if you're not familiar with the SRCoP, if you like an acronym, this is ours. It is organized by us at the UN Global Compact Network Australia in partnership with Chartered Accountants and Chartered Accountants ANZ and the ASX. For those of you that aren't familiar, with us. This is a space that truly represents the UN Global Compact pillars of Lead, Learn, and Connect as we support new and seasoned reporting entities in our world-leading community of practice. It is indeed a space where we connect accountants, sustainability professionals, risk, procurement, and legal teams. We bring everyone together to work through this new frontier of climate reporting. So thanks for joining us, friends. We have a condensed session today. We've got a lot to get through. And while there's a particular focus on Group 2 entities and finance teams preparing for their first disclosures in the year ahead, today's session will also be valuable to Group 1, many of whom are coming to the end of their first reporting cycle, and Group 3 reporters seeking to get that earlier view of what lies ahead. And as a heads up, if you see someone with raccoon eyes working on their Group 1 reports, please give them a hug. They need it right now. All right. So before we move on to our agenda and housekeeping, I would like to do a quick poll for those in the room. We had about nearly 700 people register for this. So I'd like to kind of see where our demographics for those that have just joined online. If you all could scan that QR code or link in the chat, that would be great. And we'll give you just a minute to let us know. Are you Group 1, Group 2, Group 3? Are you someone else? Just do it real quick. It's anonymous. We just kind of want to see who we've got on the call today. So we'll give that about 30 more seconds. All right. Still got a few people filling it in, so we'll give you just a few more seconds. Looks like we've got a lot of other today. I wonder if that other sometimes is are groups that don't know where they fit, kind of seeing, scoping out other things. With 500 businesses that have registered plus, I think, with multiple people from some of the businesses, it'll be good to kind of capture where we need to direct our conversation. We'll have a Q&A later as well, and I'll bring that up in just a second. All right. We've got about a third of the participants finishing up the poll. It looks like we've got a pretty even distribution of Group 1 and Group 2s with Group 3. If you could go ahead and finish the poll, we'll go ahead into our agenda and we can return to this at the end of the session. Just to let you know about SR-COP sessions, they're typically handled under Chatham House rule. They are only recorded for internal purposes, and as an exception, with today's session being an open special webinar, segments may be available from this session to those who couldn't join live. Regardless, we still ask you to honor the general SR-COP vibe and keep the identity of those asking questions as not attributable beyond this actual session. And for all SR-COP sessions, the ones that we do every month, we provide key takeaways and other resources. So we capture those notes and key themes for you, and those will be available on our SRCoP platform just in a few days. We also encourage collaboration here at the UNGCNA, but we are committed to strict compliance with competition law. Our competition law policy applies to all participants at this event and is linked in our platform. In short, Businesses should make their own independent decisions and avoid developing or shared plans of action that could weaken competition. For more details, please refer to the policy and to the ACCC's guidance on on competition law and sustainability partnerships. As an aside, if at any point you feel like you may be in breach, please recuse yourself. Note that you're leaving in the chat, and we'll record so in our minutes. In terms of other SRCoP expectations, simply, we ask that SRCoP participants not solicit business from other participants and actively engage in the sessions. Hold those questions, though, because we've got a lot to go through today, and we've got some fantastic people on the call. First, we have Jessica Davenport. She'll lead us off with a brief overview of the SRCoP and ASX's engagement. Jessica Davenport is the manager of listings and listed company services at ASX, where she supports listed entities and stakeholders with issuer engagement, listings processes, and compliance across Australia's capital markets. Following on from Jessica, we'll have some remarks from Lee Whitney, who is Group Executive, FCO, and Strategy, and he'll discuss entity preparedness and the resources available. While we are quite lucky to have Lee on the call today, Lee is a senior finance executive at Chartered Accountants ANZ, and Lee has leveraged his extensive experience to lead finance and strategy, drive organizational transformation and strategic growth opportunities, and shape the profession's future while supporting sustainable member value. Really had to condense that into one. That was quite a mouthful. Sorry, Lee, but thanks for joining us. And then we'll also have a panel featuring Talent Nation's CEO, Richard Evans, and BDO's partner and national reporting leader, Aletta Boshoff. Richard has spent over 17 years helping organizations across Australia and Asia Pacific build ESG and sustainability talent, the talent that is needed to drive both positive environmental and social outcomes. And Aletta is an advisory partner, as I mentioned, at BDO and their national leader of IFRS or IFRS in corporate reporting and sustainability reporting. She carries more than 30 years of expertise in financial reporting, carbon accounting, and sustainability disclosure. These are two of my favorite people. We're so excited to have them back again for today's special session. So get your correct questions ready. We'll have some time to answer them after we hand it over to Jessica and Lee. So while that was a lot of an intro, let's get started, everyone. I'll hand it over to Jessica now. Thank you so much for joining us. It's all yours, Jessica.
Thank you, Evan, and good morning, everyone. Welcome. My name is Jessica Davenport, and I'm delighted to be joining you today for this Sustainability Reporting Community of Practice webinar. The Sustainability Reporting Community of Practice, or as Evan mentioned, SRCoP, was established to support organisations as they navigate Australia's evolving sustainability reporting landscape. For ASX, this initiative is an important way to support listed entities as they prepare for, implement, and continue to improve their sustainability practices. We recognise that listed companies are operating in a complex environment with new expectations, evolving regulatory settings, and increasing demand from investors for clear, comparable, and decision-useful information. Our focus is on helping issuers build capability and confidence in response to these expectations in a practical and proportionate way. That includes creating opportunities for listed entities to hear from experts, learn from peers, understand emerging practices, and consider how reporting can be embedded into existing governance, risk management, and investor communication processes. What makes SRCoP particularly valuable is its collaborative nature. It brings together listed and unlisted companies, practitioners, advisors, industry leaders to share insights, practical experiences, and learnings. As organisations work through these new reporting requirements, opportunities to learn from peers and engage in an open discussion are more important than ever. ASX is proud to partner with Chartered Accountants ANZ and the SRCoP on this initiative. Together, our goal is to provide listed entities with access to practical guidance, market perspectives, and shared learnings that can support high-quality reporting outcomes over time. We are at an important point in Australia's sustainability reporting journey. The introduction of mandatory climate-related financial disclosures represents one of the most significant changes to corporate reporting in decades. For many organisations, it requires new processes, new governance structures, and new ways of integrating sustainability considerations into business strategy and risk management. While the task is significant, so too are the benefits. High-quality climate reporting helps organisations to better understand their exposure to both climate-related risks and opportunities. It encourages stronger governance, more robust decision-making, and greater organizational resiliency. Importantly, it also builds and supports trust. And investors are continuously seeking comparable and credible information to inform their capital allocation decisions. Consistent climate disclosure helps create that common language between companies and investors, improving transparency and supporting more efficient markets. We also know that many organizations are at different stages of their reporting journeys. Some are preparing their very first climate-related disclosures, while others may be refining existing processes, governance structures, or internal controls. For some entities, the focus may be on data quality and assurance readiness. For others, it might be board management, scenario analysis, and investor communication. The range of experience is precisely why forums like this is so important. They provide a setting where entities can ask questions, test approaches, hear what others are doing, and identify practical steps that can be taken within their own organisation. As Australia's leading exchange, we have a strong interest in supporting listed entities to communicate effectively with the market and to meet investor expectations in a way that promotes transparency, trust, and confidence. The transition to mandatory climate reporting will continue to evolve, and there will undoubtedly be challenges along the way. And our aim is to help listed entities navigate this transition by connecting them with relevant expertise, encouraging practical discussion, and supporting the development of reporting capability across the market. So on behalf of ASX, thank you for being part of today's discussion and for your ongoing commitment to strengthening reporting capability within your individual organisations and across the market. I truly hope you find today's session valuable, and I look forward to the insights that will be shared today. So with that, I will hand back to Evan.
Thanks for that, Jessica. It's been so good to partner with ASX and to work together to provide those companies at ASX support as they work through their climate disclosure efforts in the SRCoP. I'd like to now hand it over to Lee Whitney from Chartered Accountants ANZ. It's all yours, Lee.
Thanks, Evan. And good afternoon, everyone. It's great to be here today and see so many people on the call. I can see we're sitting at just over 330 people at the moment. So look, I'm glad to be able to share a little bit today about what to expect, particularly for Group 2 and Group 3 entities, and also how Chartered Accountants ANZ are here and can help support you on that reporting journey that you have ahead. Thanks, Jeremy. If we could just advance. Just to start, this first slide just gives a little bit of context around the scale of what's coming. So Group 1 entities obviously report this year, and they represent around 15% of the total reporting population. Now, these numbers may change slightly due to the new thresholds, but what you can see regardless is that Group 2 and Group 3 represent a much larger wave over the next 2 years, and that creates a clear capacity challenge for reporters, advisors, and assurers. The key message is really quite simple here, and that is don't leave things to the last minute. Everybody's going to be rushing for resources, whether that's people, whether that's capabilities or other external support. And organizations are going to need to invest early in all of those things. Just moving on to the next slide, CANZ has partnered with the AU-ASB and the AASB to support research by the University of Sydney into preparedness for mandatory climate-related reporting under AASB S2. This report isn't actually formally released until the 21st of August, so today is a bit of an early insight into the key findings and some of the recommendations. Thanks, Jeremy. Just getting into the data within the report, there are a few headline findings that stand out. Firstly, at the time of responding, which was actually at the tail end of last year and the early part of this year, a significant proportion of Group 2 and Group 3 entities had not started or had not yet thought seriously about AASB S2 reporting and assurance. That gap becomes even more important when we look at reporting strategy, metrics, and the systems needed to support the process. The Group 2 asset owner entities appear more prepared than other Group 2 entities, well, there are a lot of Group 3 entities that are still really at the beginning of the journey and maybe taking a wait-and-see approach. Second, there's a clear gap between how ready entities think they are and how ready assurance providers believe they are. And that matters a lot because Group 1 entities have already found the work to be more demanding than expected. And assurance providers have broad visibility across the market. And so when they look to those Group 2 and 3 entities that think they're well advanced, there is a little bit of a disconnect there. So I guess the practical message is quite blunt, but also really useful. And that is, if you think you're well prepared, it's probably worth testing that assumption early with people who understand the requirements in practice. And finally, even where entities have built internal reporting capacity, many Group 1 entities still expect to engage professional accounting firms or specialist consultants to help with the work. So again, just a little bit of an expectation setting information there. Thanks, Jeremy. So the report itself makes 4 practical recommendations. Firstly, determine whether you need to report. I guess that's a fairly straightforward one, but it's important to understand which group you're in and if you are in one of the groups that is required to report. Second, to start early on a reporting plan. Engage early with your assurance provider, whether that's your existing financial auditor or somebody else, and really integrate sustainability reporting into your ongoing governance and business strategy. It also highlights the importance of staying connected with professional bodies and assurance providers as guidance and lessons from Group 1 continue to emerge, and those parties are able to share some of the experience that they get across multiple of their clients or across their membership bases as well. So more detail will be available or is available in the reports, and they're available online from the University of Sydney. Slide 6, and just turning now to support. And as a proud partner of the SRCoP, we know that many people, and certainly CAA-NZ members, look to us for practical help on these issues. And so I just briefly wanted to run through some of the resources that we have available, most of which can be accessed both by members of CAA-NZ and non-members, also through our website. At CAA-NZ, we certainly see sustainability capability as a core part of how we support members and not a short-term response to regulation. Leading the way in sustainability is now one of our strategic focus areas because members have told us that sustainability reporting is an immediate and an important need. Our capability model describes the capabilities that chartered accountants need to do their jobs well. Around 3 years ago, we added sustainability as a core capability within the business domain as we've seen how the market is emerging. And the point is not that every chartered accountant needs to become a sustainability specialist, but it is that accountants need to be confident and credible when sustainability becomes part of their work. So compliance really creates the obligation, but capability determines whether the response is useful, credible, and fit for purpose. Thanks, Jeremy. So just looking at some of the learning assets that we have available, we use that capability model that we've just looked at to guide the resources we develop to support our members to succeed and more broadly than just CA members. And that includes through thought leadership content, information guides and playbooks to help people navigate the reporting process, as well as online learning designed to build the capabilities individuals need in practice. We've built a range of micro courses, certificates, and also some more structured programs for those who need deeper capability. And we also run an annual sustainability conference, which brings together expert speakers and gives people the opportunity to network with others that are facing similar challenges. All of these resources are available to CAA-NZ members and non-members, as I mentioned before, through the Sustainability Resource Centre on our website. We're also developing additional content that we will release later this year and ongoing so that that resource suite will continue to build as the reporting environment matures. I just want to highlight a few of those in a little bit more detail now. And the first that I think is a really practical starting point if you're looking to build sustainability capability is the sustainability playbook that we released last year. It helps individuals and teams look at the work they currently do and understand where sustainability fits in that context. It also provides a framework for capability development at both a personal and at a team level. So it can be used by individuals who want to identify their own development needs or by leaders looking to uplift capability across their entire team. The playbook includes case studies from experts and others who have already been on the journey, and it helps make the content practical rather than theoretical. So this is available, as I said, from our website, or some of you may already have scanned the QR code that's on the screen if you wanted to get direct access to that right here and now. The next piece that I wanted to highlight, as I mentioned earlier, was our sustainability conference. So last year we ran our inaugural CAANZ Sustainability Conference. That was a hybrid event and it received incredibly strong support. We heard from high caliber speakers, including Mark Goff, who's the CEO of the Capitals Coalition, Matt Keane, chair of the Climate Change Authority, and Sue Lloyd, who's the vice chair of the International Sustainability Standards Board. We reached full physical venue capacity and had 100% attendance on the day, which if you're a conference organizer out there, you'll know is quite unusual. We also achieved a 94%, that's 94% customer satisfaction score and some really, really fantastic feedback. So the next conference we will be holding later this year in October. And so if conference learning is your thing, look out for more information as details are released. Moving on to the next piece, and this is our certificate in climate-related disclosures that we've released. So we've developed a range of CPD training to help people build the skills they urgently need, including the certificate in climate-related disclosures. And it's really designed for the practical reality many organizations are facing. So sustainability reporting is now landing across finance, risk, operations, strategy, and finance teams are often being asked to bring the work together. So that means engaging with many parts of the organization, gathering operational data, emissions data, and risk assessments, and connecting that information to strategy, financial performance, and disclosure requirements. So while the work draws on familiar accounting capabilities, it's still a new field for many accountants, and many organizations are still developing the systems and processes they need to collate, manage, and evidence the data. So the certificate itself combines online learning with live masterclasses led by practitioners and focuses on applying the requirements in real organizational settings. It covers areas such as identifying climate-related risks and opportunities, connecting those risks to strategy and operations, working with emissions data, engaging suppliers, preparing documentation, and building disclosure reports that can be reviewed and assured. And a key benefit is that participants hear from practitioners who are working through these challenges now, and they learn alongside others that are facing similar issues. So the focus is very much about applied capability, not just knowledge of standards. Just on the next slide, as an example, participants who successfully complete the certificate also receive a digital badge, which they can display on their LinkedIn profiles or elsewhere, or in email signatures, and that helps people show their achievement and signal their capability in this space and in sustainability reporting more broadly, and I guess advertises that to the broader community. Moving quickly on, we also have a suite of practical publications and information guides that have been developed to support members as climate-related disclosures and assurance expectations continue to take shape. Common theme across the guides is that they are practical and topic-focused. They're designed to help unpack specific areas that organizations and advisors are consistently asking questions about, rather than trying to cover everything at once. The practical roadmap, for example, helps organizations think through how to get started, what the key building blocks are, how activities fit together, and where effort is usually needed early on, which, as we said, is very, very important. with guides on materiality, on Scope 3 greenhouse gas emissions, scenario analysis and transition planning, each going a level deeper into concepts, challenges and emerging practice. And many of these publications have been developed with industry experts, including accounting firms, universities, specialist organizations, so they both reflect technical requirements and what's seen in practice. There's a range of other resources for SMEs, recognizing that smaller businesses may face issues through value chain requests or financing discussions, and assurance-focused guides to help people understand what assurance over climate and sustainability information means and does not mean. And the intent isn't that people are reading everything, but that targeted resources are available when a specific issue comes up. So in summary, I guess all of this information and content, should it be helpful to anybody, is available through the CAANZ Sustainability Resource Centre, which you can access through the QR code on the screen. And that page also links you back into the broader SRCoP as well. But if I can leave you with one message, it's this: sustainability reporting is an incredibly valuable process, but it does take time and effort to do well. So start early, use the support that's available, and look for the business and strategic insights the process can generate. So I will leave it there. Thank you, and hand back over to you, Evan.
Lee, thanks for that. We'll probably follow up on some of those key points, talking about resourcing and that gap with capability and assurance in the next panel session here. But I'm so glad to see the support that is out there for both new reporting entities and to uplift those that have already started their second round or getting ready to start their second round of mandatory climate-related financial disclosures. So thanks so much, Lee. We really appreciate having you on. Next, we'll have a panel with a couple more of my favorite people, the Richard Evans of Talent Nation, and the woman, the myth, and the legend, that is Aletta Boshoff of BDO. Get those questions ready and get them in quickly as we've resolved the echoing thing for most people. I know there's a bit of an issue there, but if you do have questions, we'll start going through them. We might not get to everything because we only have about 20 minutes for this panel, but we'll get through as much as we can in this shortened panel. So thank you, Richard. Thank you, Aletta, for joining us. I know you both have very busy schedules and have had a lot on today, so I really appreciate you coming in. So for both of you, I guess we'll start with that first kind of softball question, but now that we've had a bit of a look and we're kind of seeing what's coming out from Group 1's first cycle, I'm curious about what has surprised you and what should Group 2's watch out for. We've already heard that token phrase, get started early, but I want to know what you're seeing, particularly for those without the budget or dedicated teams that Group 1 had and how they're getting set up. So I'll hand it over to you first, Richard, and then you, Aletta, to answer that question on what you're seeing from those Group 2 reporting entities and what you've learned from Group 1's.
Yeah, sure. Thanks, Evan. And it's always great to be a part of these. I'm a massive fan of the SRCoP and the work that you're doing, because I think what we find from Group 1, 2, and 3 entities is, people are going through this for the first time, and it's and certainly I'll frame my responses from a talent perspective and a resourcing and a capability, whereas Aletta has got had far more exposure to doing it firsthand. So I guess what we saw from the Group 1 is just how much work was required to get through to this point, and even for the larger entities, so if you look at a lot of the Group 1 entities, they've already got established sustainability teams, or they've been doing voluntary disclosures, and so almost had a starting point from which to work from. But even going through that process, just the gaps in the data and I guess the time required to actually pull together the information and actually map things out, I think surprised a lot of people. Certainly looking at it from the perspective of Group 2's, as I mentioned, there isn't that resourcing capability. So actually looking at who has got accountability for this and mapping out that deadline of, I guess I'm able to witness it firsthand at the moment. My partner's working through Group 2 assurance. We're working directly for a CFO, and they haven't had that capability in-house for it. So there's an education piece required as well. But for the most part, it's not about trying to build the capability immediately. It's probably that gap analysis component. Going, okay, well, what does the pathway look like? What is the capability we've got in-house, and assessing that, and not necessarily relying on being able to buy in that expertise from consultants or last minute, because we saw a lot of Group 1 scrambling. There was a lot of conversations around the various networks in terms of, it's coming up quick. They're 3 months out. They haven't done enough. Like, how are they actually going to get to that point in time? And it really came back to bite people and organisations, and in terms of the expenditure required to get them across the line at that last point. I think maybe, Aletta, you could probably talk more in terms of your direct experience, and then if there's other components from a resourcing perspective that I can link into.
Yeah, let's bring it back to resourcing and kind of that gap analysis. But Aletta, I would love to hear your thoughts. You see a lot of Group 2 reporting entities, and you've seen a lot. You've just gone you've just gone through the throes of it, or is still in the midst of it, I guess, with the Group 1s as well. So what are you seeing right now?
Yes, so good afternoon, everybody. Thank you for the opportunity. Now, I've worked with Group 1 entities, a lot of them in an advisory perspective to get them ready for assurance. But then at BDO, I've also been the subject matter expert for our own auditors when they provide assurance. So I've seen both sides, obviously not for the same client. I would say the number one thing is assurance, and the need to get assurance over this mandatory sustainability report has been a complete game changer. I think the fact that financial report auditors had to qualify and requalify, and that they provide this assurance, has put an absolute spotlight on all these disclosures, and there's been a rigor to these disclosures. I think if anybody ever wanted to do research around the value of an audit, this is a perfect case study, because these auditors have really put all the entities, through their steps, and saying, do you have everything? Have you done a complete job? Have you documented everything, etc.? So I think that assurance angle has been amazing. The second thing that we have to be realistic about is when we start to get ready for mandatory sustainability reporting, we have to understand that the data that we have to disclose, or the information we have to disclose, do not exist. All right, so we have to actually actively go and run projects and generate data in order to meet the disclosure requirements. It's different to an accounting standard where you've got a general ledger and there's some data that you manipulate. Here, usually, there's nothing, and usually we start from more or less scratch. So there's a lot of time required. I think that's important. The third thing that I think has been very clear is, now that we've got mandatory sustainability reporting with assurance required, the game changer, this is now the responsibility at a governance level of the Audit and Risk Committee, and at a management level, the responsibility of the CFO. Now, I do appreciate that the CFO needs help from other people within the organization, but we've genuinely seen that CFOs have grabbed this, and they've worked with audit and risk committees to get all the systems, processes, and sign off in place. So I think that's really important that we've seen. The other thing, I think it's incredibly important to take the board on the journey. I think maybe, especially Group 2 and 3, maybe the boards are not involved yet. So I think it's incredibly important to get those boards educated on the journey, so they endorse the CFO and Audit and Risk Committee to do all this work. I do agree with what Richard has said. A lot of entities are sitting with a knowledge gap when they start. So I think it's really important that entities focus on education and that if they work with professional services firms or advisors, they make sure that there's a focus on knowledge transfer. You don't want an advisory person to come in, like myself, do all the work, and you still don't have the knowledge. You need knowledge transfer as part of the project. You need your people to be educated, to be taken on a journey, so that in future they can own this. So it's a big job in that first year, but if we educate your team properly, they should be able to maintain this information, because this is now with us forever. So I think that knowledge transfer, collaboration, incredibly important. I should also say, I believe that we should be pragmatic and we should be practical, and we shouldn't boil the ocean, and we should understand that in that first year we have to be fully compliant, but practical and pragmatic. And continuous improvement is a wonderful word and a wonderful phrase for sustainability.
I think as well, just kind of building on that, Aletta, if I may, yeah, we've seen with individuals being brought into organizations like a focus on, they have to understand the standard. Like they have to have, they have to have done this before. They have to, like 12 months ago, no one had done this. Like no one had been through it. So I think it's less about if they are looking to build that capability in-house, it's less about going, right, okay, they have to be fully across the standard, because everyone's going on this journey together. And so, having the internal stakeholders on board so that understand the organization and who to go to, and to your point around the data, Aletta, who do you get the information from? Because you can bring in an advisor or a consultant, but if they're not empowered to get that detail, then it all falls over. And it's almost an exercise in program or project management. They're starting a year out, but what are those timelines? And then you can bring in the capability from the advisory firms, if you're looking at scenario analysis or some of the technical capability required.
Yeah, I love that you mentioned. Oh, sorry, let it go ahead.
No, sorry, Evan. I wanted to say I agree with Richard. It's incredibly important that this is a journey that management and executive are on, because ultimately management and executive know the business best, and they should be guided by advisors on what to look for and things to consider, and they should be further educated around climate-related matters. But this is a decision, a judgment for management and executives. When auditors speak to our clients, and we are often in the room as the advisors, the auditors would say, are these risks and opportunities Aletta's view or BDO's view, or is this the view of management? And it's incredibly important that it's management's view, because they will have to continue. I mean, one, they know the business better than me. Number two, they have to now embed these risks and opportunities in a risk register and in an enterprise risk management framework. And they are responsible for ongoing strategy. So I really think that education, that collaboration is incredibly important. Yeah, I 100% agree with you, Richard.
Yeah, they're also the ones that are going to be dragged in front of ASIC if they get it wrong, not you.
Yes.
So.
Yeah, absolutely.
Absolutely.
Yeah, if the fear-based approach doesn't work, then I don't know what will. Aletta, talking about this knowledge transfer, and Richard, I love the point that you made about scenario analysis. I know a while back we had a conversation about, how to best bring scenario analysis work in-house, and how to best, what you can engage externally as well, and different perspectives from different corporates that have been working through the SRCoP. Aletta, in our previous conversations, we've had a lot of people also talk about what we can learn from this assurance process, right? Lee mentioned earlier that there's a clear gap. 25% of those surveyed companies hadn't even thought of assurance. But you've mentioned before that relationship is really important. I would love to ask, what do conversations with auditors look like in practice? How do we bring everyone into the room so that we can, and what are we learning, I guess, about how we adjust and refine those implementation roadmaps based on that auditor feedback?
Yes, a really good question, Evan. I think with Group 1 entities, and obviously with all of the entities, in the very first year that you're reporting, there's a requirement to have limited assurance over only 3 sections of AASBS 2, and that is governance and risk management, the identification and the description of the risks, and then measurement of scope 1 and 2. What's interesting is if I look at the 3 of them separately, government and risk management disclosures, the auditors want to see evidence. Evidence on how sustainability reporting has been embedded in the board's charter, has been embedded in the Audit and Risk Committee's charter, has been embedded in the position description of the CFO. Or whatever committee. So it's the evidence. Don't tell us all these things. Show us the evidence that supports it. So to get that right and get the evidence right is important. When we look at the risks and opportunity assessment, I think one thing that's incredibly important is you can do a climate risk and opportunity assessment and come up with a long list of risks and opportunities. However, the standard requires you to what we call do a prospects assessment. So the standard says you have to consider and you have to cull the long list of risks and opportunities to a short list of risks and opportunities that will be disclosed. And the culling process is what we call a prospects assessment. And that is the standard says you only disclose risks and opportunities that could reasonably be expected to impact your prospects, and prospects mean your cash flow, access to finance, cost of capital. So that culling process, I think, has often been overlooked in practice. That is a document that the auditors zoom in on because they want to make sure that you've thought properly about which of these risks and opportunities should be disclosed, because only those on the short list will be disclosed. And, in that prospects assessment, we consider inherent risk, we consider residual risk, we consider potential financial impact, we consider the peers, we consider the industry, we consider a market perspective. So documenting that is critically important, and auditors focus on that. And then the third thing, when we get to scope 1 and 2, the auditors, and I want to compliment the auditors because I think they're right. The auditors absolutely are fixated on the completeness of measuring scope 1 and 2. So they focused on completeness of the carbon data. And I've talked many times about how we reconcile that back to the general ledger. So I'd say on those 3 areas, those would be the things the auditors have really focused on for that first year. But even it might be a good opportunity to also mention that we have seen some different approaches by different auditors. And some auditors have just looked at those 3 areas that they have to express a conclusion on. But some auditors have actually done a lot more work. They've actually looked at everything. They've looked at scenario analysis. They've looked at quantification, all those other aspects, because they're saying, next year we have to provide a conclusion on that. So let's have an early peek and give you some feedback. So we've seen some auditors go very hard on those other aspects as well. And maybe something to mention is we've coined a phrase, a director's liability gap. And that is where we have to understand that in your first year of reporting, the entity reports everything in AASBS 2, with the exception of scope 3. The directors have personal liability for most of that information. They've got some protections on 3 areas. And the auditors only look at a small part. So the directors are taking a lot of risk in the first year. because there's a lot of aspects where they've got personal liability and the auditors are technically not expressing a conclusion. And a lot of audit and risk committees and boards have then said to me, so how do we discharge our obligations? So what questions should we ask management and CFO before we can sign off? So that's, in the slides that I think we'll share, we've developed a checklist for boards and audit and risk committees where we're saying these are the questions you should be asking.
Aletta, thanks. That leads into one of they're all flying in while we're running out of time. So we've had some really good questions in the chat. Luckily, we'll come back to these in the next sessions. We'll be doing a session on Scope 3 and data collection really soon. One of those questions I thought was really interesting, just a follow on, is, we'll be sharing that pack that you put together in our follow-up comms. So don't worry about that, everyone. We'll get to those resources to you. But one of the questions was about working with a Group 2 entity that has received relief from auditing its financial statements, and they're having a bit of trouble bringing the CFO on board. They have limited financial data, few established systems or controls to draw on, no prior experience with assurance internally. How do you get that engagement with the CFO? What is the starting point when you've had that relief, but now you have to kind of almost start from scratch?
Yes, usually I think it's really important to, it's always education, meet with the CFO and step through the regulatory requirements. Because if the entity is saying we don't see strategic value, I mean, I could debate that with them, but I might lose the debate because, they're not that interested. But if you look at the compliance angle and the responsibilities and the penalties that are applying to the directors of the entity, the Corporations Act is saying whatever duty of care directors have for the financial statements, they now also have that to report. There are huge penalties for the directors. So I think that's something to remember. You are lodging this with ASIC, and therefore there will be questions there as well. Unfortunately, in this case, it sounds like we have to go with a bit of a stick approach, but I think information is important. Information is important. However, I always want to talk about strategy and potential value and benefit for an entity. As a business, if you do this well, it could attract more customers. It could get you cheaper financing. It could get you access to more investors. So I think there's a strategic conversation that every CFO cares about. And there's also a compliance aspect. So I usually talk about both.
Love those
I think
levers.
that,
Richard, take it away.
Yeah. I mean, it's almost it's a common thing that people in sustainability have had to deal with for a long time. Like at the moment, it's around disclosures, but it's always been a challenge in terms of how do you demonstrate value to the business, to the core business functions, and so the skill sets around that stakeholder engagement and really what's in it for them. And I guess to your point, Aletta, you need to start within the risk context. So what are the things that have to be done, but also what is in it for the CFO? If they're not going to be doing anything beyond what they need to do, they've always been measured on the financial performance of the organization. That's what sits within the Constitution. So this will be seen as noise, but to your point, there's a compliance obligation. There's regulation sitting around it. So you need to find those points, but also make it as easy for them as possible because they don't have bandwidth, and so you're trying to plug into that. So how do you keep it short, simple, but ensure that they're getting across the information?
Absolutely.
So, for me, I think when we do a climate risk and opportunity assessment, which is the absolute starting point, a lot of businesses focus on the climate risks. And if we look at the first reports for 31 December 2025, on average, entities disclosed 5 climate risks that passed that prospects assessment, but entities have only disclosed 1 opportunity. And I think that is indicative of the fact that we're not looking hard enough for the opportunities, and we're not looking hard enough for the value, because often the risk and the opportunity is flip side of the same coin. If this is a risk to your business, it's a risk to your industry. If you do it well, it's an opportunity for you as compared to your peers. So I think that workshops and discussion around climate risk and opportunity assessment is sometimes powerful. And if we do research to show them what the new potential products could be, what the cost savings could be. We did some research, BDO in the US did some research around sustainability, and we looked at what are the top 10 benefits. And this was in the US, despite President Trump. What were the top 10 benefits? And number 2 was increase in revenue. And number 6 was cost savings. And those two together gives us wonderful margins. So that's the kind of things that I think we should explore.
Absolutely. Well, thank you, Aletta. Thank you, Richard. We are well out of time for any more questions, and we've got a few good ones. So we'll take note. But that does kind of answer the last question that I was going to ask, is what you've seen done well. Finding those, not just leading into the risk, but finding those opportunities at the flip side of the coin is something that we've seen increasingly discussed in that group 1 conversation. What are you learning from the assurance process? Where is the value creation opportunity? Those are where I'm seeing some of the more mature corporations kind of come out of this at this moment and get more buy-in from the organization for that. So it's been really good to have you both on here today. Thank you, everyone, for your questions. Aletta, thank you for sharing those resources. We'll make sure to get them out to everyone. Thank you so much for joining us, Richard. We've got a couple other things to cover up very quickly. It's been almost a year since we launched our sustainability reporting community practice, and I want to thank everyone for their contributions and dedication. And that also means that our very first community members will be coming up to renew their subscriptions. So please keep an eye on community notifications and your inbox as that date approaches. Our next session, we have a peer learning session on target setting and messaging, something that we actually just chatted about, Aletta, this week, and as well with chartered accountants. But this includes the implications for those transitioning from voluntary disclosures and how setting credible and defendable targets that have a clear direction for your decarbonization strategy need to be disclosed. This is something also that a lot of our Group 2 entities really want to start thinking about as they're going through this process as well. And I think a lot of our Group 1s would have really wished they had more resources to dedicate at the beginning of this journey. So we'll learn a lot of things there. That session is the 27th of August at 1 p.m. Existing SRCoP members will receive registration links in the coming days, or you can register anytime via the SRCoP platform. If you're not in the SRCoP yet, you can just scan that QR code and find out more. You can regularly register directly in the SRCoP or join us as a UNGCNA participant and receive 2 free slots. Greta Westcott, our senior manager from our engagement team, will share some more information. And I've just got a quick Slido question. Jeremy, if you could go to the next slide. I just want to spend about 30 seconds. So fire away, scan that QR code. And I want to hear from our audience here. We've had, I think, nearly 400 at one point on the call today. I saw over 350, I think, in the midst of moderating. Share with us what you're interested in discussing in our upcoming sessions. We make these sessions for you. They're a place where we can really work through these nitty-gritty issues and spend some time. So I see a few participants here. Greta, we'll spend about 10 more seconds getting this feedback, and you can continue to put the feedback in the background. I'm seeing technical scope 3 discussions. That is great. That is well on our radar. We've had a lot of questions, again, on scenario analysis, quantification of anticipated financial effects. We've done sessions on that before. I think we need to do a little bit more. I think there are more questions coming through around transition planning, next steps in sustainability reporting, integrated reporting. I'm just rattling off topics right now. But yeah, let me hand it over to you, Greta, to talk about joining while people fill these out in the background.
Great, thank you, Evan. Before we wrap up, I just want to take 1 minute to talk about UN Global Compact membership. If you're on this webinar, chances are sustainability and responsible business practice already matter to your organization. Being part of the UN Global Compact isn't just a badge, it is a working membership in the world's largest corporate sustainability initiative. As a member, you get access to practical tools and frameworks that help you turn commitments into action, not just policy documents, but real guidance on reporting, target setting, and benchmarking against your peers. You're plugged into a local network here in Australia, so you're learning alongside other business, tackling the same challenges and not working things out in isolation. You also get to connect regionally and globally. As Evan said, members get 2 free spots on the sustainability reporting community of practice. In addition, there are working groups, training sessions, and events throughout the year where you can go deep on the issues that are most relevant to you. Whether that's modern slavery, climate targets, supply chain due diligence, our offerings are targeted at procurement, risk, legal, marketing, comms teams. And we reach young professionals, sustainability experts, through to C-suite and board level. So if that resonates, I'd love to talk to you. This QR code will take you straight to our membership and joining page with my details at the bottom, so you can get in touch or find out more in your own time. So thanks for your interest, and back to you, Evan.
Thanks so much, Greta. We'll have a peer discussion section next month where we'll dive into target setting and messaging around those current and previous voluntary targets. How to best engage the board in discussions on those targets will be a key point of emphasis. As always, we'll be posting session takeaways on the platforms next week, so check out those and our resource library, which is curated by the team. We put only really good quality resources in there. So we'll hang on the line to answer any questions, but have a great day, everyone. And remember, if you see someone finishing up their first round of reporting, give them a hug. I'll see you next month. Thanks, everybody. Thanks for joining, everyone.
Thanks, Evan.
Thanks so much. And I'm here to answer any questions that anyone has. So if you've been hanging on awkwardly and want to throw a question in the chat or anything, I can just answer it here. You don't even have to throw it in the Q&A section. Great, we've got a good comment about auditing. Thanks for all the feedback, everybody. That's been really helpful. Someone calling Aletta a guru. Well said. All right. There's no more questions. We'll go